Let's put the spotlight on Lupin because this one came out with their numbers yesterday post-market hours. And if you look at the numbers, healthy set of numbers coming in for Lupin for the quarter gone by, where you have the PAT that is more than doubled. You have the margins that is actually beaten the estimates as well, 22.8% versus 20% on the quarter or on a year-on-year basis. Let's exactly understand what transpired in the quarter gone by with the management of Lupin. We have Vinita Gupta, who is the Chief Executive Officer of Lupin, US and Overseas Business Operations. We also have Nilesh D. Gupta, who is the Managing Director, India, as well as Ramesh Swaminathan, who is the Executive Director, Global CFO and Head of API Plus Sustainability and IT at Lupin. Very good morning to all three of you. Thank you so much for joining us on ET Now. And Vinita, let me start this conversation with you because the US saw strong growth in the quarter gone by. We believe that it was likely driven by strong wrap-up in Mirabegron, which saw an uptick of about 71% on quarter-on-quarter basis. But the key question right now that comes in is, will this growth momentum continue going ahead, Vinita?
We're very optimistic that we continue this growth momentum in the US. I mean, it's not just the last quarter, the last many quarters. I said 10, 12 quarters have been strong in the US based on execution on our portfolio, as well as very strong focus on optimization efficiencies to ensure that we maximize the P&L. At this particular quarter, Mirabegron certainly was a strong contributor, but as were other products like Spiriva, where we saw continued ramp up of generic utilization, and products like albuterol, despite additional competition, contributed well. And other new products like Rivaroxaban, where we had a limited number of launches, was a really nice contributor. And Predfort, which was a CGT launch for us in the previous quarter, has been a good contributor. So, multiple contributors to the performance in the quarter. We expect this base now to continue and hopefully high single digit to double digit growth in fiscal year 26 based on the existing portfolio as well as new product launches. We just launched Tolvaptan earlier this week. It's been a really strong launch for us, established relationships with all the material specialty distributors as it's a REMS product. So we'll see the uptake is going to be, not similar to a simple generic, but should be strong based on the relationships that we've established. And then the additional products that we intend to launch, especially on the injectables front, the second half of fiscal year 26, also are exciting opportunities for us to build our injectables business, which is the goal for the company.
Okay, Vinita, thanks for that. This is Snehi also joining in. Help us understand, how is the company preparing for tariffs with respect to the recent executive order that has been announced? What implications can it have on the branded versus the generics market? And also give us a sense on how do you think the Indian players stand to be impacted from this?
Start the generic versus branded because the most recent news on the executive order with respect to the MFN really is targeted more to the brand side of the industry. But ultimately, anything that impacts the brand impacts generics. So we obviously watch it very carefully. I'd say that the industry is still looking for clarity on that executive order. It's not clear how it's going to be implemented. So one will have to wait and see to find out really the implications of the MFN, clause that for HHS, then CMS, Medicare, Medicaid, that the government has put in place. On tariffs in particular, we are waiting to see what transpires. There are tariffs in place on China right now, and that have an impact on the generic industry, impact on us as well. Already on but as of last week, I mean, the US and the Chinese government is negotiating as well, and we saw one round of tariff cuts, so can expect to see more evolution on that front as well. When it comes to India in particular, I mean, I think that India is I believe it's in a good place as part of the US-India trade negotiations. The importance of India in particular for pharmaceuticals, 50% of the drugs in the US are imported from India. So we are a big part of the solution and have emphasized that to both governments. Lupin in particular has a significant commitment to the US, being the third largest company by prescriptions dispensed in the US.
Okay, but Vinita, just to follow up on that, are you seeing any impact already or industry-wise because of tariffs?
Just minimal impact that one is seeing from, products in-sourced from China. So the industry sources some APIs and key starting materials from China. The APIs, have some tariff impact already. So we factored that into our forecast, and you already see that in our last quarter, where we have provided some, for tariffs on. It's a minimal though, single-digit $1 million impact on tariffs on Chinese in-sourced API.
Right, Nilesh, let me come to you and get your view then. We've witnessed a soft growth in India, likely due to the impact of the empagliflozin. When will this actually grow? If you could help us understand what's the outlook, especially when you talk about that drug?
So we actually grew a little lighter than the market. So we grew at 7.8% for last year versus IPM growth of 8%. And you're right, I think it was impacted by the LOEs. This was the last of the big LOEs that we had, right? So, I mean, we're very happy that we own the brand and that we're going to build. We're already seeing 30-40% increase in volume in the product. So it's going to be a big bounce back here. And then next year on, I mean, we're done with the exclusivities. So now it's going to be about, consistent double-digit growth. If you look at just across the therapies, so cardiac grew by roughly 10%, diabetes grew by 30%. Respiratory is the segment where the market has been very, very sluggish, and that's been really dragging our growth down as well. The fourth largest therapy area for us is GI, where we grew at 12% internally. So it's been good growth as well. So, I mean, basically we now need to get back consistently to that double-digit growth. We've guided for growing at 20 to 30% ahead of the market. That's our aspiration. And I think we're committed to it. I think we're all in on India. We have a great team. We have a good size sales team. We have great depth. There's a very exciting set of products, both through in-licensing as well as from our internal stable. I think we should be looking at consistent growth going forward.
Okay, Ramesh, let me come to you. Good show coming in on the margins front. Despite material uptick in your R&D spends, there's been a 90 bips uptick on a year-on-year basis. It's made up 9.5% of your revenues. That's the equivalent. What's the way ahead for margins in R&D, and what levels can we expect here?
No, so the momentum continues on the margin front. So over the last 7 to 8 quarters, we've been continuously focusing on margins, and obviously because of the buoyancy on the top line, and of course, tremendous focus on various lines across the entire P&L. The margins, of course, have crept up. The top line, of course, contributed largely. The mix has contributed to the gross margins, apart from, of course, focus on alternate vendor development, routes to synthesis, etc., which helps in bringing up the gross margins. Equally, there has been a lot of focus on other lines as well, including, for example, the distribution, the air freighting, vis-a-vis, in fact, ocean freighting, the kind of write-ups that you've seen in the past. So there is still a lot of things to be done. And the other thing which I would rush to say is that the adjacencies are still evolving. And if you were to knock out the impact of the adjacencies, you could add easily another 4 percentage points to our margins. And they would also evolve over the next several quarters. So from that perspective, we are pretty optimistic about the future. So it is going to be led by top line buoyancy and, of course, tremendous focus across various lines in the P&L. And, of course, doing the right thing when it comes to the adjacencies.
Right, Ramesh. Hi, good morning. Cheryl also joining in the conversation. If you could help us with some guidance that you have for Lupin for margin on the margin front, especially for FY26, any indicative range that you can leave us with?
There are, of course, as I said, a lot of the positive, strokes that are that will actually contribute, but there are also negatives in terms of the forex rate, for example. It's been depreciating. The rupee has been appreciating a bit. So I would not venture to actually come out, but I'm very confident that the tempo would continue and our margins would increase in the next 2 to 3 years for sure, continuously.
Okay, and lastly, Vinita, also the EMEA market growth is up 30%. Can you help us understand if this momentum will continue, and will the first half be very strong, led by the FTF products for Lupin?
Yes, we expect, take the second question first, H1 to be strong. We just launched tolvaptan earlier this week, so that's going to be a material driver. In the H2, we should have injectable drugs like risperidone and liraglutide, glucagon. So we expect those to contribute well as well, while tolvaptan still builds and sees additional competition. EMEA growth has been very heartening, promising for us to see, driven by a good part due to our respiratory products. Luforbec has been a fantastic product for us, where we were first generic to market and continue to ramp it up across different regions. We are building the high strength product this year that will continue to drive growth in Europe, and also other product portfolio, like we acquired the Arain range from Sanofi to add to our respiratory portfolio in Europe. That is a nice contributor. Products like Raltegravir, difficult to do products, have been nice contributor for Europe. So very focused on really leveraging our US portfolio, our generic portfolio into Europe as well, to be able to build up Europe to a larger part of the company.
All right, then we leave it there. All the very best to the entire team at Lupin. Thank you so much, Vinita, Ramesh, as well as Nilesh, for joining us on the show to talk about the quarter gone by for Lupin and what can one expect in the brand new year, that is FY26. Thank you, as always, for being part of the earnings discussion.
If you like this video, then like, share and subscribe to ET Now.